Traders, how you doing? Tom Willard Trading, Sunday, August 7th. Want to do a lesson here today for you guys. Um, this is around reward to risk. Now, I've done a number of other videos on this. A lot of my videos updated now are just stock ideas. I'm going to do another one for that. I'm going to actually do a crypto one here too. Try to knock out a few for you here in the next day or so. But this one I wanted to lead off with. It's around what to look for here when you're looking to enter a trade. So I'm going to get into the specifics, the nuts and bolts around reward to risk and what you should be looking for, what I look for in my trades. First off, globally, let's look here at the QQQ. It's the NASDAQ ETF. You'll see that we are in a downtrend here on the weekly chart. And the daily chart up here on the left shows that we are trying to change trend. We have the moving averages have curled over the shorter time frame. The 20 has moved over the 40. You got the 200 still above. So we may be in the infancy of an uptrend. However, on the weekly, we are just still on a solid downtrend. And actually on the weekly, we are in the perfect area to get short. I repeat, this is a good area to look to get short. Now you need to have rules to get in to get short on. But now's the time. You're back here in the zone between the 20 and 40. They're rolling down. You've got one lower high, a lower low, lower high, lower low, lower high, lower low, then a higher high, slightly higher high. I took it out, retested it. Then we had the big move down, lower low, and now we've got a higher high here that's happening, but it's still happening within the minor resistance area here of this lows. These lows put it in March right now. And we've been up here a number of days, and over the last, since, good Lord, since the 4th of July, the 1st of July, actually since mid-June, we've been up with a couple of hiccups and pullbacks in between. So right now, as a general rule, I'm telling you, on my longs that I've capitalized on, I'm out of most of them, and now I'm looking to get short, okay? So a lot of people don't like to short. So I'm going to use the inverse ETF of the QQQ to give you my example here as we break this down. So that way you're going long to go short, if that makes sense. Buying the inverse ETF is also like shorting the QQQ. And you'll see the weekly chart's a little bit destroyed on it, but the daily chart is not. So let me show you that here. Okay, here we have the SQQQ. Now I am long. I bought this. Okay, I have bought this, and I'll show you where I bought it. And I bought it prior. I'll show you those two where I actually got stopped out. I am a huge proponent of taking your stops and taking your losses when and if they hit. Don't ask questions. Just get the hell out of Dodge. I'm going to tell you exactly how I'm in this trade right now, looking to add to it, and we'll talk about what makes sense and what doesn't. But this is the SQQ. Now, like I said, the weekly chart here is destroyed because it came from way up here, so the candles are all mashed together. So don't even worry about that. The weekly chart, or I'm sorry, the daily chart here, though, is what we're going to key off of. So what I've drawn here on the lines, you'll notice here, for all intents and purposes of a downtrend, this SQQQ is in a daily downtrend right now. You've got the 20 period under the 40. It's rolled over. You've got a series of, look, lower highs, 1, 2, 3 lower highs, 1, 2, 3 lower lows, 4 lower lows actually. We're trying to form our 4th lower low. Also, what I want to point out to you is this. Okay, notice the move here from here to here, and it moved back up to here. What is that? About 50-60% of that move, right? Here to here, it retraced to here. That's probably about an 80% retracement. Okay, keep those in mind. So about a 60% retracement, 80% retracement. Here to here, retrace to here, that's probably what, about a 40% retracement. And now we've got from here to here, a 50% retracement based on Fibonacci, right? Is right here at 43.25. So I drew that line of where 50% retracement. So if truly we are in a downtrend on the SQQQ, meaning we are in an uptrend on the NASDAQ, which I don't believe is what's going to happen. I think the odds are is this is going to come retest 100% retracement to the 50 area. But worst case scenario, in a normal downtrend, you can try to play long on these things. Going against a trend is not highly advisable unless you know what you're doing, looking for 30 to 40 to 50 to 60% retracements. And that's okay if, one thing, if your reward to risk is worthwhile. I repeat, if your reward to risk is worthwhile, you can go against the trend, okay? It's easier to go with the trend, okay? Someone was making comments around, hey, buy when the market is up and sell when the market is down. Yeah, no, buy when the market is trending up, err on the side of buying, err on the side of selling when the market is trending down. But you can go both ways. And this is an example of going both ways. Because I think truly at the macro level, we are more going to be in a downtrend on the Qs, which means an uptrend on the SQQQ. But Worst case scenario, I know where I'm going to take some profits, 50% retracement. And you can see here, 60%, 80%, 40%. 50% might be a decent thing, you know, especially if something coming in, maybe there's a big report coming, you're at 45% retracement, you got a 50% retracement target, and there's a report coming the next day. Are you going to wait around for the last 5%? No. Take the 45% and go home, right? If you're wanting to lock those profits in, you're close. You're in the range. This is not an exact science. It just gives you a kind of a basic target. Okay. All right. So I set the table here of what we're looking at. So then the question is okay, when do we get in? Well, let me first talk about what I did. When this came down here, notice it hit the support area. I bought here. I bought in this candle, wrote it up, and then wrote it right back down. Got stopped out. I took a loss. I was up decently, and I took a loss. Here, I bought it here, and then I got stopped out again. So I bought it now again right here, and I'll talk about this scenario here and where my stop is. And if it comes down to my stop, guess what? I'm not going to hold on. I'm going to get out and take the loss. It's not a big deal because you're looking for the bigger returns, and we got to see if this return's worthwhile because we are fighting the trend here on the daily chart. So let's go to this mock-up I did here. Hold on. Okay, I'm going to toggle back and forth. Here in italics, the top pivot is 50. The bottom pivot low is 36.38. So the top pivot here is 50, and here's 36.38. Here's the bottom pivot low. Okay, so that's 100% of the move, assuming that this doesn't tomorrow, Monday, or this week go lower and take out this low, because then this is no longer the pivot low. The pivot high has been established. The pivot low, not necessarily. See, this could have been the pivot low, and I was anticipating it was when I took it long here, but then got stopped out here and took the loss. So now I'm fishing, right? I'm casting another line. I think this is going to finally bounce here. But if it doesn't, I'm going to get the hell out of Dodge. So is this the pivot low? Well, we'll find out. So right now it's the pivot low. It's holding. But if it breaks, then I'm getting out. So a 50% retracement of this move from the top to the pivot, so it's just 50 minus this divided by 2 is 43, and added to the baseline is 43.20. So going back to that, that's where I got this 43.25 line right here. So it's within a nickel of that. That's a 50% retracement. Okay? Follow me on the math. Entry 1. Entry off the candle low at 37.75. So when I bought this thing on Friday, here on this day, when it broke the top of this candle here, 30, like my cursor there to the right, 37.77, right there, 37 right there, 37.75-ish, right in that area. It breached the high. That's your entry on the daily chart. Now you can take an X-ray on the 60-minute chart and look to get in, and I'll talk about that in entry 3, which we'll talk about in a second. But that's where I got in. So my stop is the low. So here's the math on mine. I entered there. My reward to risk for 50% retracement, which is, I think, like I said, worst case scenario against the trend, unless you get stopped out, of course, a half retracement of that move up. Going back to the chart, moving back up to this blue line. So that's 43.25. 43.25 minus my entry gives me a target, a profit potential of $5.45 per share. My stop is where I got in minus that low of that candle, 36.30, which is 97 cents. So to find my reward to risk, I take the reward, $5.45 divided by 97 cents, and I get 5.6 to 1. That's good. Now, as a rule of thumb, generally, I'm looking at 3 to 3.5 to 1 as an acceptable reward to risk for a trade. As you can see, totally above my expectations. I took the trade, okay? Now, if we get more of a 100% retracement, just as you can see that there, you know, what's that distance there? Well, that profit potential off that 37.75 entry on 100% retracement is $12.25. The stop is the same. So if it retraces 100%, I'm going to make 12.6 times my risk, reward to risk, assuming I hold all the shares the whole way. Now, what I told you I'm going to do is I'm going to be selling a portion at the 50% retracement. So if it actually retraces 100, I'm not going to make 12.6. It'll probably be more in the realm of 7 to 8 R times my risk factor of 97 cents. Okay, both handsome trades. So that's my approach on this. And guess what? If it turns around, I'll take the loss. I'll take my one risk unit lost, 97 cents. So let's just say for round numbers, $1,000 shares. So if I get stopped out for $1 loss, I'm gonna lose $1,000. If I hit my 50% target, I'm gonna make $5,450, again minus commissions, which are negligible nowadays. All right. If it hits 100% on 1,000 shares, I'm gonna make $12,250, and I'm only risking $1,000. Okay. So again, just so you can work that. Now, You're just watching this video. Say you didn't enter what I did. Say you're going to enter off Friday's candle. So what's Friday candle? Notice Friday's candle took out the high. I got in. So you can also enter above this candle here, right? Say, oh, I'm late to the party. I like this Tom guy. I think he's on to something here. I want to get in. I want to buy this stock if it breaches the high of this 38.54 here number. So let's do the math on that. Entry 2 off Friday's candle. 38.54 is the high. Reward to risk. Well, you still got the 50% retracement, right? It's still 43.20 minus this higher entry. Your only profit potential here is 4.66 as opposed to 5.45. So $1 less, right? Stop is higher too because you've got a higher entry minus the same stop pivot point. Your stop is $2.16. So what is your reward to risk here? It is 2.1, right? 2.1 is your reward to risk. Now, when I said earlier, 3 to 3.5 to 1 is what my, so would I take that trade? No, it's not worth it, okay? Unless I know for sure, which I would be lying to you if I did, that we're getting 100% retracement, because at 100% retracement, you got 11.46 gain instead of 12.25. Your stop's the same at 2.16, but if you divide those two, your reward risk is a much more hardy and acceptable 5.3. But if truly we are in a downtrend here, which the facts prove that we are probably in a downtrend, even though I think weekly chart is not lining up on that cues, I think we're going to be in a downtrend there, which means an uptrend here. We're going to get a bigger retracement than the 50%. Okay. You really shouldn't expect more than the 50% retracement. Okay. So I would not take the trade above that 38.54. It's not worth the risk at 2.1. Now, when I got in, it was totally worth it, okay? So if you're in, you're late to the party, then I wouldn't take it there. Now, where would I take it? Okay, what is the other option? Well, as you know, things don't always move in a straight line. We could sit here and base for a couple days and then go shooting up. We could sit here and base for a few days and go ripping down. So say, for example, something comes out and this thing opens, what was the entry here? 37.75. Say this thing opens, right, in this same area, the 37.75 area right here on Monday. Well, then you're getting in, and you could still use that stop because technically the entry triggered, right? So you can still get in. I may add to position. If it comes down to 37, I may add to my position, and then my stop is still the same because the candle is indicated an entry. So if you get a better price on the intraday chart and a tighter stop, meaning your stop's going to be the same area, then I can add to the position. So that would be a good scenario. Okay, now if it opens up at 35, I'm getting stopped out. I'm not buying it again. If it opens up at 39.40, I'm not buying it. It's not worth the reward to risk, right? Your stop's going to be too huge compared to your turn. So ideally, Monday, you get a flat open. If it opens at 37.39, last print I saw was 37.58 in the after hours, which is still below my entry, below where I got it. Heck, I might buy more, depending on what's going on. Same stop, and then you go back to this scenario, entry 1, where your reward to risk is worth it. But if it opens up in that, I would say 38.20 range and above, it's not worth the reward to risk to the 50% retracement point. Okay? Whew. A lot going on here, but hopefully this math helps you kind of work through how you can get in and how, if you miss the entry, you can still get in. Through the fact that the pattern is hit. It's not a climactic buy setup. The volume did pick up nicely, but you're basically playing the trend based on look at the equal moves, right? The move from here to here is very equidistant to here to here. The move from here to here is less than this, and this move here is pretty equidistant to these bigger moves. So the chances of a bounce at a 50% retracement, to me, are higher and worth that risk where you're getting 5 reward to risk on your numbers. If you're getting into the 37.50, 37.70, 37.80, maybe anything south of 38, I think is a good entry. Your stop, though, you've got to take your freaking stop. And realize that you could lose a lot more than you're anticipating. So say I bought 1,000 shares, and I'm saying, oh, I'm only risking $1,000. No, that's BS. Because if this thing opens up at 32 on Monday, tomorrow, then guess what? I just lost $5,000, not 1,000. That's the danger of holding overnight. However, it's a double-edged sword, right? It could also open up at 42, and I could be sitting pretty and most of the way to my target already, right? And like I said, I think this is going to a better chance of getting 100% retracement ultimately. But I guarantee you, I'm going to be taking partial profit. So say I've got 1,000 shares of this here at this level. If it gets up to here, I'm going to take 500 off the table. bank those 500, let the other 500 ride. Maybe do a trail stop on the daily chart. Will it come down as seamlessly? Will it go up as seamlessly as it came down? Your guess is as good as mine. I'd say typically it doesn't. It'll chop around and make gap down, gap up, gap down, gap up. But that's my approach. All right. Hope you guys found this useful. As always, hit me up. If you have any questions, comment on the video, like, subscribe. Have a good one.